Hello, lovely listener, and welcome back to A Wealthy Life, the podcast where we cut out the fluff and help you feel confident and make values aligned financial decisions no matter what the market's doing. I'm your host, Vicky Wachet, and today's episode is for anyone who's been sitting on the sidelines thinking, is now a good time to start investing in property? Maybe I should wait until things get better. Maybe it's because you've been reading the headlines, seeing the stock market drama, or just wondering if the UK market is too far down the regulatory track for you to start. Maybe you're just scared of making a big mistake. All of those are valid reasons and plenty of reasons that I've heard in the past. The truth is, there is never a perfect time to start investing, whether it's in the stock market, in business, or in property. But there is the right time for the right person with the right resources and a clear strategic plan. And so today I'm going to help you cut through the noise and the fear, of course, spot some genuine opportunities in this market, understand the risks and how to handle them, and decide whether this is the moment for you to step into property. So, what is happening in the property market right now? The landscape in 2025 looks very different than it did in 2008 when I started, but actually very similar. Back in 2008, new regulations were coming in around HMOs, houses of multiple occupancy, and licensing was coming into effect. We were in the middle of a global meltdown. So, regulations and meltdowns on a global basis. What about post-pandemic 2022 when the Liz Truss budget came out and all of a sudden interest rates skyrocketed? You're always going to have some excuse or other, something going on in the market because it is so vibrant and dynamic. There is always going to be something coming out. There is always going to be something going on in the market. But the truth is, we're coming out of a period of instability in the UK, in the property market. There is an interest rate fluctuation. We've started to see that the Bank of England is steadily lowering the base rate, which will have an impact on interest rates. There is a risk that they could go up, of course, but we always make sure that our numbers work, not just at current interest rates, but at much higher interest rates so that we know that we can cope with any changes. And yes, there is a shifting economic landscape from the regulation to the threat of builders actually building more properties, and of course, the international stage. But house prices are starting to soften. They often do at this time of year. This is when people have got over Christmas, got past the Easter hurdle, and they're thinking, is now the time to put the house on the market? More houses up for sale mean more choice, mean house prices soften. Plus, I think that we've got over, it's taken us a long while, granted. And when I say we, I mean estate agents particularly, got over the hype that came with the pandemic and everybody suddenly wanting to move house. I saw house prices absolutely rocket from an average of 125 up to 150, 160,000 in the matter of 6 months. Completely unreasonable and not necessarily affordable to the current sellers and buyers because they have to be able to move and afford where they're going to. So sellers are more open to negotiation. In fact, pick the right seller and they're always open to negotiation. But the big thing here is that we've seen rents steadily increasing over the last couple of years due to increased demand and reduced supply. We have not been building enough properties as a country. We live longer, we create more families, and so we need more properties. And if the government hasn't been incentivizing the private sector or funding at local level to invest in property, then it's down to us, the private landlords, to provide the properties that the tenants demand. And of course, with all the regulation, with the flux that's been going on in the past few years, we've seen a lot of landlords leave the market in droves. And that's good because that's opening up space for new professional investors to step in and fill the void. But it is still ensuring that there is a supply and demand mismatch. So while property is not easy, there is certainly a window of opportunity for the right person with the right plan. So, what are those opportunities that are out there? And what's going to work in your favor if you decide that you do want to explore property investment as a way to increase your financial security, something that we definitely all need? So, I've mentioned that prices are calming down. We're no longer in that frenzied bidding war of post pandemic 2021. And this means that you can calculate and negotiate and buy based on value, not on panic. Because the only reason that the prices stayed high is because people were prepared to pay for them. And not just desperate residential buyers, but some inexperienced investors were buying at elevated prices. And property is all about supply and demand, both on that rental side and on the sales side. And if you buy at the higher prices, you're basically telling the estate agents that they've got the pricing right. And after those crazy post-P moments where the pressure of lockdown was released, and then, of course, the Liz Truss budget that created the interest rate disaster, a lot of people simply couldn't afford to move. And that meant that we had higher interest rates for a short period, and we had lower properties coming on the market, and that's holding the prices high. Well, it's stabilised now. Interest rates are back to their normal, around 4 to 5% for buy-to-let properties. We've started to see the demand come back to the market. There are more houses up for sale, and that's good news for everybody, for the residential market and the investor market alike. But alongside more supply of properties that we can buy, we need to know that there's actually people wanting to live in them. And because there's a housing shortage, and there's no denying that, and as I've said, people are living longer and renting for longer, the private sector not building as much as it should, and the government still in talks, and they talk and they talk and they talk, but they're not making traction on the years of underdevelopment. We have a situation where not only have you got a supply and demand type within the sales area of property, but we've got a mismatch in terms of supply and demand in terms of the rental needs. There simply aren't enough properties for rent on the market. And this is why you've got 10 to 20 people applying for the same property. And that's good news for us. Because if you provide a decent home in the right area, you'll have stable demand from tenants who are going to stay longer, but also your pick of the market. If you've got one person applying for your property, you'll take them. If you've got 10 to 20 people, you can work your way through the applications and see who is most suited to staying in your house and who is going to stay for the longest. Because if you can avoid the voids, you can increase the cash flow. Now, we also know, because I've said that there are more sellers, and we've also got a situation where older landlords and those holding properties in their personal names are starting to sell up, partly because of that combination of age, but also disillusionment with yet more regulations. And this is allowing us, the smarter new investors and the seasoned professionals, to pick up well-located properties that others are walking away from. They cash flow. There is no reason to sell. We are in this for the long term. So as the market eases with residential sellers coming to the market, we've also got landlords coming back to the market and selling. Perfect for us. There are more mortgage opportunities out there now than ever before. We had the changes a while back, thanks to Osborne when he was Chancellor, that's caused everybody to now buy their properties in a limited company. And so that's introduced limited company mortgages. But there are so many products tailored to both new investors and some of the more creative strategies that you can enter the market with the right amount of capital and the right amount of guidance. Now, you might be able to get mortgages more than 75% with less than 25% deposit, but I still favor that because we're going slow and steady. A 25% deposit with good rental coverage is perfect to provide that long-term cash flow that won't cause you stress when interest rates or the market changes. There are some out there advocating BRR strategies. This is where you buy it, you refurbish it, you remortgage it, and you rent it out. But what you've done is you've shrunk down that capital in the property so that you can have more money to go again quickly. But by increasing the mortgage, what you're doing is reducing the cash flow. And the whole point of this is cash flow. It's not about going quickly. All of my clients are going slow and steady. We buy the first batch of properties, whether that's one or two or four, and then they save. And then we go again in another 2 to 4 years. I've been building portfolios that way for the last 20 years, not just my own, but my clients. And not one client has ever come back to me and complained about the cash flow. Not one client has ever panicked when the interest rates changed. And that's because our goal is not the vanity of a large portfolio, hastily built and vulnerable to those rate changes, legislation changes even, etc., everything that's going on. But slow, steady, sturdy cash flowing portfolios that means my clients are stress-free and building in the choice now to design the lives the way they want, a wealthy life. And you're not too late. This is one of the biggest myths out there. People always say, in fact, I'm sure I've said it myself at times, I should have bought 10 properties 10 years ago. Yeah, of course you should. But woulda, shoulda, coulda solves absolutely nothing. And in 10 years from now, you'll be saying the same about 2025 if you don't take the time now to explore whether property is the right opportunity, the right investment for you. And of course, I can help. From having that honest and clear conversation, we can book a call. And if you think that you want to learn how to do it yourself, rather than have me do it with you, then have a step-by-step course with personal time from me to help you understand the maths, and yes, there is maths in property, your strategy, and the best application of your resources so that you can go through the process of developing a cash flowing property business. And whether you end up learning and buying for yourself or move on and source for others for a fee or ask me to do it for you, it's worth that call to check whether property is right for you right now. And I'll be honest. Now, while we're talking about honesty, there are risks and you always need to be aware of them. You need to have in place a plan, and property is not risk-free. We know that. So let's have a look at some of the risks that are out there and how you can mitigate them. I think that if you're starting out, the risk for you might be to buy with emotion, whether that's frustration, quick, I've got money, it's burning a hole in my pocket, I need to buy now, or whether it's that classic, and if ever I hear a client or a mentee say this, my warning flags go up. I've fallen in love with this house. Absolutely not. I love this house. No, you don't. You love the maths. You love the budget. If you love the house, you'll end up stretching that budget, ignoring the maths, and not making the return, the interest on your money that you could be making. So you have to know your numbers even before you view the property. I have a model and I only shop to that model because I know it works. This is about a business decision, not a lifestyle one. You're never going to live in this house. Business first, then profits, and that leads to your lifestyle or more houses if you want them. And of course, while we're talking about buying with emotion and the risk of ignoring maths, the second risk is overstretching financially. thinking I can make it work when you're tight on funds, not leaving yourself a buffer. It's absolutely lethal. I can't count the number of properties, not just over 20 years, but even this year that I have viewed where it's absolutely clear that the investor, and I'm being polite there because they're not really an investor, has run out of money. They haven't budgeted properly. Or the other way round, they've bought with emotion, they've overspent, and now they can't raise the price to sell at a profit, which is what they want to do. First, you are investing for the long term. There are plenty of houses out there, and I'm working with mentees at the moment that want to buy their first house and they're getting a little frustrated that they're not landlords already. But the properties that we are considering now, 3 or 4 months after they started, are much closer to their budget, not only because they've saved a bit more, but because prices have come down. But they're better properties in a better area because we waited rather than rushing. We created a mathematical model that we had to make work, not took a pile of cash and then worked out what we could just grab from an estate agent and make it work afterwards. The plan first, then the purchase, then the profit. Now, this isn't about procrastination, this is about the numbers. So, I would say always start within your means, plan for every cost. When I work out the budget for a property, I am extremely detailed and include everything in that return and investment figure. And that's not what all sourcing people do for you. I would say build your reserves, make sure that you've always got a buffer, and then go shopping for cash flow over ego every single time. I think there are also people out there, particularly if you're down south where I am, who think that the northern streets are paved with gold. And what I need to tell you is that a pretty house in a wrong street in London won't make you money. A pretty house in the wrong street in the north will get you a bad tenant. I've never sent a client a photo of a property before a spreadsheet. I had way too many clients right at the beginning pick a weaker house because it looked nice, or reject the best cash flowing property because they didn't like the paintwork, the front door, you name it. It's maths over cosmetics all the way. It's local area knowledge and mathematical modeling. So you have to research thoroughly. You have to know your area inside and out. And I do. I spend time there. And if you're going to work with a professional like me, someone who's got decades of history in an area, you'll know that you're getting that research and, in a sense, some of that confidence from area knowledge. I would say beware of the newbie sources that either don't have their own portfolios or don't really know an area and how it can change. You need to understand tenant demand, not just the volume, but what the locals like. I personally like carpet in my house, but my tenants like laminate. They like blinds, not curtains. They don't always want a garden to maintain. I can't imagine my life without a garden. Know your tenant specifically. Know your local employers. Understand the transport links. We thought that people would want to be near train stations when we first went north, but they use the bus. So actually, it was bus links that were more important. And this matters so much more than paint color. Okay. So, really understanding your area and your tenants is what matters most. Then look at a picture of the property afterwards because a picture can obviously tell you things like cracks and damps, but you're going to see that for yourself when you visit. Or I do that for you. And I would say there is a big risk here from not being prepared for regulation. You can't ignore things like energy performance certificates or licensing or tenant law for that matter. And we know that we've got the changes coming with the Rent Reform Act. So you must educate yourself or work with someone like me who has a teaching background combined with years of experience to support you. And I can point out the pitfalls and the opportunities. The team that I put all my clients with, whether they're mentees or private sourcing clients, are extremely extremely well experienced in the property market. They have been doing this longer than I have, and they know what's going on. They can spot a good tenant. They know how to spot a fake reference. And we are working with an experienced team to make sure that all of my clients' properties cash flow with as little stress as possible. And I did mention this before, there's always that feeling of not quite ready, waiting too long. And let's be honest, we can talk about all sorts of things, and whoever feels 100% ready for anything, except maybe dinner if you're hungry, waiting for the right property won't make you wealthier. What you need to do is first decide, do I have the time and the inclination to learn how to invest in property myself? Do I want to visit houses every other week while holding down a full-time job and running a family? Or do I have the money and value the experience of someone with 20 years and buy in expert help from someone like me? So whether you want to start learning or whether you want my help to start investing, you can just book a call and we can start that plan together. When the numbers work, we can take that first step. So what I want to say to you here is, it's a question really. Should you start investing in property this year? Well, ultimately, only you can answer that question. But this is what I would say if you asked me. If you want to build long-term inflation-resistant wealth, then yes, you need to be investing. If you want to create an income alongside your job that's manageable on just a few hours a month, then you need to be investing in property. If you want control over your financial future, the choice to retire when you want, the financial security to feel that no matter what's going on in the world, you're okay, because after all, people are always going to want to live in your property, you need to be investing in property. Property is the smart way to build wealth, to create a second income, and to give you control of your financial future. But only if we work together to create a clear strategy based on your goals and your resources, both your time and your money, so that we don't create a burden for you, a stressful situation, something that you'll end up hating rather than loving. Knowing your financial plan and understanding that property is a long game and that slow and steady builds that sturdy cash flow, that's the way to a wealthy retirement of your choosing. Are you willing to treat property like a business? I will ensure that whether I teach you how to do it yourself or do it with you, you will have long-term, lifelong mentoring support from me to ensure your success. All of my clients, whether they buy into the mentoring or they buy into the sourcing, will be taught how to run their property businesses. And I have a community packed full of resources for them, as well as regular calls with me to make sure that everything is running smoothly. Now, if that sounds like something you want support in, then let's chat. Book that complimentary 30-minute property strategy call with me. You'll see the link in the notes and at the end of this podcast. This isn't a sales pitch, and the call won't be a sales pitch either. It's a proper chat about where you are now, what you want in life, and how you could get there with the least stress possible and the most clarity. Most of the calls that I have do not result in business for me, but I enjoy having conversations with people, helping them understand the pros and cons of property. And some may never decide to invest in property. It's not for them. That's fine. Some want to invest in property, but now's not the right time. And so they leave with clear action points to get them prepared. And occasionally I have a call with someone and now is the right time. And all they were looking for is to speak to me to work out whether I am the person that they want to work with. So let me just finish by saying I really appreciate the time you devote to listening to this podcast. And my only goal is to be a clear, calm voice in the chaos, helping you to develop both the financial mindset, the strategies and the goals so that you can create the life you want to live, a wealthy life of your choosing. Please do make sure that you subscribe to the podcast because you know how that helps. And if there's any topic you want me to cover, whether that's mindset and goals, money and investing, and of course, property itself, let me know. As a former lady DJ, and back in the days when I did it, you could actually say that because there are almost no other women being DJs. I know how to take a request. So get your requests in. And what I want you to take away from today's podcast is this: there is no perfect time, but there is the right time for you if you're prepared. 2025 as a property market is full of opportunities, and we don't always get to say that, but it's full of opportunities for people like you, strategic beginners, but also professionals who've been in the market for a while like me. Smart, supported actions beats overthinking it every time. Learn, act, decide, and then you get results. Listening, 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 and doing nothing will get you nowhere. So that's all for today. If you know someone who's been hesitating on the sidelines and they're thinking about investing in property or want to think about investing in property, forward them this episode. And if you're ready to explore property as a real strategy for cash flow and financial security, then you know where to find me. Book a call. And until next time, next week, stay calm, stay strategic, and go and build yourself a wealthy life, as well as book that call with me. Very best wishes. My name's Vicky Wishay, and you've been listening to a Wealthy Life podcast.